getting down to some serious mark scoring issues. We are going to look at the structure and contents of financial statements. This first video, obviously all in terms of IS1, this first video on this topic will be the statement of financial position. We often call this SFP when we abbreviate, but you're not going to abbreviate in your exam. Sometimes in the workings or future studies, when you're doing journals as workings, you'll use SFP. So IS1 is quite specific about what needs to be in the actual statement of financial position. First and foremost, you must have the name of the actual company or group affected. Then you must actually name the statement or the document you are creating. What I also need you to notice is that you have to put a date, and when it's statements of financial position, you're always going to write at 31st of December. So statement of financial position at 31st of December 2014. Okay, it's going to be slightly different for the statements of profit and loss and the statements of changes. Then you also need to put in the current years column where you're going to have all the figures listed, and then the prior year, what we call the comparative. Right, you also need to put in the currency in which you are working. Here we'll put R for rands. And if there's any rounding, for you guys it's never going to be rounding really, but sometimes financial statements, if they're in billions, will round the first 1,000. You must tell the users where it's been rounded. Then the overall format. Let's make sure we understand what the format is all about. If I quickly go back to the previous slide, just to have some space. Remember, the statement of financial position is about the accounting equation, right? And that accounting equation was assets equals owner's equity plus liabilities. We always need to have everything balanced, the debits and the credits. So that's exactly how we're going to lay this out. We're going to have our top first heading being assets. And you will see in the next lecture, in a lecture or two's time, we're going to discuss the difference between current and non-current. But basically, non-current are assets that we will realize or get the future benefits after 12 months. So we'll list non-current assets first. Then there will be different types of non-current assets. You must put in the ones that are specific for that question you're working on. But what you will definitely need is at least the following. You will need property, plant, and equipment. That will be there in almost every single one of your statements of financial positions. Then there also may be investment property. Okay, investment property is measured differently to PPE. So we have a separate line item, and IS1 specifies these line items, please. Then we must have intangible assets. Now, intangible assets are exactly what the name means. It's assets which you can't touch or feel, and this might be copyrights or licenses. Then we'll deal with something which we're going to touch in Study Unit 1B, but that is the financial assets. Okay, so that is all of our non-current assets that you need to put in. One or two other ones will creep in as your studies go on, but this is what you'll need. Then you will look at current assets under a separate heading. Okay, and current assets are assets where the future benefits will be realized within the next 12 months. And those will be inventories. Okay, your stock that you're going to either make and then sell, or that you buy and sell. Then your trade and other receivables. Sometimes we call this debtors. Okay, and then you'll have other current assets, maybe prepaid expenses, etc. Okay, and if there's any current tax assets, you'll put those in as well. And sometimes we'll just refer to this as SARS in the notes, South African Revenue Service, the taxman. And don't forget, what is this all about? It's about cash and cash equivalents. Please, we don't call this bank. It's cash and cash equivalents. Okay, so we've got the assets all listed down here. What I need you to understand is you're going to have a figure for each of these. I'm going to denote that figure by an X. You'll put those figures in a block and sum them up to put them on top. Current year as well as prior year. Okay, along with this, you will more than likely need notes to the financial statements. So you'll have another little column called notes, and you'll list those notes. And those notes will be behind the financials and will expand on this figure. So you'll have note maybe 2, 3, 4, and 5. Okay, inventories 6, you get the point. There'll be a note for every single one. Sometimes, please remember, financial assets might be under non-current and current. So let's just put those in here. I'm just going to draw the line. It could be also in there as well. Okay, I'm finished. What am I going to do? I'm going to add up my total assets made up of my little block that I filled out for current assets. And the total will be non-current plus current. And I put a line with a double line underneath it to show a summation. Please, you'll also do prior year for current and a total. Okay, so now you've got your total assets figure. Below your assets, you will move on and you will start with owner's equity and liabilities, right? Let's just start with a heading. So this is my statement of financial position continued. Usually in one long statement, this will be below the assets. And we will go and put our first heading down. Equity and liabilities. Remember the years. And you put your rands in there as well. Okay, so under equity and liabilities, we must split equity and liabilities up. So we will have a total column for, well, let's just start with a heading for equity. And equity will be made up of issued share capital. Remember, issued share capital, not authorized, right? They're going to be different. You'll deal with that under companies. Okay. And this is for a company, ladies and gentlemen. The formats will be slightly different for partnerships, etc. Right? Remember, IS1 only affects companies, not partnerships. Okay, only companies have to do IFRS. Partnerships can choose to do so if they wish, but we'll deal with partnerships in the relevant study units. Then you will have your other reserves, and these reserves may very well be revaluation surplus on property, plants and equipment, mark-to-market reserve on financial assets, etc. And last but not least, you will have your retained earnings. Okay, retained earnings is all your accumulated profits. You've heard that term before. Every year your profits will be made cumulative, right? And we put those in. I'm just going to do under the 24. Let's do under 23 as well. Then you will end up with total equity. Now later on in your studies, you'll see life gets a bit more complex because we have something called non-controlling interest. It's when you have a group of companies and you put it all into one big group financial statements. That you'll worry about in FAC1601 going forward. So equity, then you will have total liabilities as your next heading. And total liabilities, we'll worry about coming back to sum up in a minute. Total liabilities, let's first go and do non-current. Remember, liabilities, they'll have to be settled after 12 months. And your non-current liabilities are going to be made up of long-term borrowings, your bank loans, etc. Okay, on top of that, there will also be other financial liabilities. Okay, the long-term liabilities are technically long-term borrowings. Okay, next up, we also might have long-term provisions, etc., but we'll leave it there. Then I'm going to have current liabilities. And your current liabilities will be, firstly, your trade and other payables. You would often have heard this referred to as creditors. Okay, so there's trade and other payables. Then there may be short-term borrowings or the current portion of long-term borrowings. Borrowings that are repayable within the next 12 months. You need to be writing this out, stopping, pausing, copying, and making sure you have a format that you can use throughout this semester, right? Okay, then there might be, let's write it out separately. The current portion of long-term borrowings. I'm running out of space here. Just fitted it in. Okay, so we have 3 current liabilities we've discussed so far. Then there may be current tax payable. My handwriting is getting worse as we go faster, but I want you to see that this takes time to write. You need to rush, guys. You need to learn to write this fast. You can't sit and think about the format. You must know it. And there may also then be provisions that are current. Okay, so you will add up your current liabilities. You will add up your non-current liabilities. And then you'll do one big block. Excuse the slight running out of space. A big block where the non-current and the current get added together to give me total liabilities. Last but definitely not least, I will then go up to the top and I will take equity plus total liabilities to give me total equity and liabilities. Okay. Now, what we must remember is that the assets total should equal the owner's equity plus liabilities. So we should have the total assets plus the total equity and liabilities must be equal. Now, guys, in a perfect world, in the real world, they have to be equal, otherwise you're in trouble with some type of authority, right? But from an exam perspective, let's just settle down and realize that you will make a mistake. You are not going to get 100% for this exam. I'll be over the moon if you get 90, but we're not going to spend hours adding up the whole assets and the whole owner's equity and liabilities just to find they don't balance because you made a mistake or you ran out of time, didn't put everything in. So whatever you have under assets, just put the total in under equity and liabilities. Thank you, guys. Let's move on.